Hey everyone, welcome back to Corporate Decoder. FGDL just filed its quarterly report and it's showing a significant drop in value, mostly because the price of gold itself has taken a tumble. Quick note, this is not financial advice, just my take on public filings for educational purposes. The big story here is that the fund lost about 12.7% of its value in just 3 months. And the main reason is that the gold it holds became worth much less. Let's look at the numbers at the end of June 2026. The fund's investments in gold were worth about $415 million. That's down from around $475 million at the end of March 2026. This is a drop of over $60 million in just 3 months. This big drop in the value of gold means the value of each share also went down. At the start of the period, one share was worth about $61.37. By the end of June, it was down to $53.59. That's a drop of over $7 per share. The report tells us this big decrease is directly linked to the price of gold falling. Gold prices dropped from about $4,608 per ounce at the end of March to around $4,026 per ounce by the end of June. That's a significant decrease and it directly impacts the fund's value because its main job is to track the price of gold. While the price of gold is the main driver, there are also expenses. For this 3-month period, the fund paid about $174,000 in sponsor fees. This fee, which is about 0.15% of the fund's total value, also contributes to the decrease in value, though it is much smaller than the impact of gold prices. Now let's look back at the same period last year in 2025. Things were quite different then. The fund actually saw its value go up. The net asset value per share increased from about $41.54 to $43.82. This was because the price of gold went up during that time by about 5.5%. In the second quarter of 2025, the fund also had some positive movement from realized gains on gold, amounting to over $2.8 million. This, combined with an increase in the value of the gold held, led to a net increase in assets from operations of over $10 million. Looking at how the fund's total net assets changed tells a clear story. In the first 3 months of 2026, the net assets dropped by over $60 million, mainly due to the falling gold prices. But in the same period of 2025, net assets increased by over $10 million. It's also interesting to note that for the 3 months ending the 30th of June 2026, there were no new shares created and no shares redeemed. This means the number of investors in the fund remained steady during this period of price decline. This is different from the same period in 2025 when there were significant creations and redemptions of shares. The fund's main expense is the sponsor's fee, which is set at 0.15% of the net asset value annually. The sponsor covers most other ordinary expenses like administrative and custody fees in exchange for this fee. This means the fund's overall expenses are kept quite low. The biggest risk for this fund, as highlighted in the report, is its concentration in gold. The price of gold can be influenced by many things like global supply and demand, inflation expectations, and even political events. If gold prices fall, the value of the fund's shares will fall right along with it. This is exactly what we saw happen in the second quarter of 2026. Looking at the overall picture, the Franklin Responsibly Sourced Gold ETF is designed to simply track the price of gold. When gold prices go up, the fund generally goes up, and when gold prices go down, the fund goes down. The report clearly shows a significant negative impact from the recent decline in gold prices. The fund's expenses are minimal, which is a positive, but it offers no protection against the inherent volatility of the gold market. My biggest concern is the direct and significant impact of gold price fluctuations on the fund's performance, as demonstrated by the recent quarter. While the fund itself is managed efficiently with low expenses, investors are entirely exposed to the unpredictable swings in the price of gold. The research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Check out the Discord in the description.